watching Opening Bell with me, Nandita Khemka. It's a Friday morning, just about, waiting for the week to close really. But it has been a good week after last week's drubbing. We've seen 3 straight days of gains coming in on the Lal Street. The Nifty has reclaimed that 23,300 mark as well, but the global cues aren't looking all that encouraging this morning. We are looking at a negative open. Even in the pre-open, both the Nifty and Sensex are trading in the red. GIFT Nifty, of course, hinting at a weak setup, and Wall Street also gave up the gain that it saw in the previous session. So yes, negative setup, but of course, lots of stocks in focus, especially the heavyweights that reported numbers post market hours. So all of them will be in focus. All your stock related queries will also be in focus. So keep them coming in. We'll try and take stock of them, and of course, we'll be talking about all the stocks in news as well. But before we move any further, let's quickly take a look at the top headlines at this hour. Wall Street snaps a 3-day winning streak amid weakness in tech stocks. In fact, Asian markets also edged lower, with the GIFT Nifty hinting at a negative start for our markets. Crude prices retreat from multi-month highs, but Brent continues to trade above that $81 a barrel mark. Meanwhile, gold prices rise to monthly highs as treasury yields dip. Reliance Industries reports a good set of third quarter numbers driven by the retail and oil to chemical business. Jio reports numbers in line with estimates. Meanwhile, Infosys raises its revenue guidance for FY25. Third quarter revenue growth beats estimates while margin is in line with expectations. However, the Infi ADR trades with cuts of over 5%. Axis Bank's deposits and advances growth comes in at a 15-quarter low as it reports a weak set of third-quarter numbers, and LTIMindtree's earnings are marginally above estimates, beating expectations on revenue growth and margin expansion. And tech giants Wipro and Tech Mahindra along with SBI Life will report third-quarter numbers today. Also watch out for numbers from Jio Financial. Okay, then let's quickly take a look at the cues for trade then. Yesterday we saw a third straight day of gains coming in, the Nifty ending above that 23,300 mark. The broader market outperformance continues for a third straight day. We saw the mid-cap index gaining 1%, but the small cap index was clearly outperforming with gains of somewhere around 2% or thereabouts. Metals and PSU banks, these were the sectors that led from the front yesterday. PSU bank index has been doing well over the last few sessions. And yesterday as well, it gained in excess of 2%. HDFC Life, that was the top Nifty gainer after good set of numbers. Remember, SBI Life is the other one to watch out for. Yesterday, it was up and about, due to a rub-off effect of what was happening with shares of HDFC Life. But today, particularly, it will be in focus given the fact that it will be reporting numbers. L&T Tech reported in-line set of operating performance, but the stock was up somewhere around 6 to 7%. Trent, meanwhile, had reversed Wednesday's gains. It was the top Nifty loser. Wednesday, we saw some bit of reprieve. The stock has been stuck in a downtrend. After 8 straight days of losses, it recovered some ground on Wednesday, but yesterday again, it succumbed to selling pressure. Reliance Industries saw a good spike, in the last half an hour of trade ahead of numbers. And of course, today it will be reacting to a good set of numbers. Axis Bank is the other one that will be in focus. Numbers aren't all that great. Slippages have risen. Provisions have, doubled on a YY basis. Asset quality has worsened. NII is below estimates. So yes, Axis Bank is one stock to watch out for. And LTIMindtree, inline kind of numbers. So that stock was also up and about yesterday. Today, it will be reacting to numbers. In terms of Nifty put call ratio, it jumped to over 1%, over 1, I beg your pardon, from 0.82 levels. And looking at the FNO band list, no new additions or deletions, but a whole host of stocks will be in FNO band today, the likes of RT Industries, Angel One, Bandhan Bank, Hindustan Copper, L&T Finance, RBL Bank, Aditya Birla Fashion, Kalyan Jewellers, Manappuram Finance. So this is a long list of stocks that will be in the FNO band. FIIs, they are again net sellers to the tune of 4,300 crore rupees. Since the start of the year, they have been selling pressing the sell button, so to say, and there is no reprieve when it comes to FII sell-off. But domestic investors continue to be buyers, and they have bought shares worth 2,900 crore rupees in the cash market. On that note, let's bring on board our technical guest for today. Joining me is Raja Venkatraman, co-founder NeoTrader. Raja, great to have you on the show. What do you make of the bounce that we have seen in the market over the last 3 sessions and today? Given the fact that the setup is looking a bit negative and we have a few heavyweight results to digest, where would you expect the Nifty to take support?
Yeah, good morning, Nandita. Thank you for inviting me to the show. Well, the way the markets are poised, it's again the cues which we can take on from the domestic segment are the result season. So right now, the result season, this was the first week of the big names, and we had some big names yesterday: Reliance, Infi, Axis Bank, and the way now we have to take the cues ahead is based on how the markets are going to react to those numbers. So the results definitely of Reliance and Infi were encouraging. Axis Bank was not so encouraging, but then based on the cues which you are getting from the ADRs, we are looking at some positive traction to we can expect some positive traction in Reliance and Axis while Infi is down. So now considering that the market is also a little bit confused on what needs to go ahead, so it will be a very tight rope which we are walking on. So the kind of moves which we are seeing over the last 2 days have been encouraging. And now the least which could happen today is that the market shows some reaction. So everyone is awaiting the reaction to the numbers, and that will be the mainstay for the day. And today also there are a lot of big names coming up with the numbers. So it's a Q3 based action, and the way the markets are poised right now, it's going to be a difficult task ahead. Like Bank Nifty helped the markets scale higher few weeks ago. Now what has happened is that Bank Nifty has become very nimble, and any break in Bank Nifty below 49,000 or any break in Nifty below 23,000 would be on a serious note a more stronger decline. Until then, it's going to be a range bound market scenario because there is clearly a lack of enthusiasm here, and we should not be taking the current rise as once again a resumption of a bullish trend. I would, based on the kind of OI data that is getting built up, we are now at 23,200 to 300 as an important area of support. So now going ahead into today's session, which is the last trading day of the week, we should be looking at these levels to hold. So if these levels hold, and if markets reacts a little bit favorably, then we could see a more positive close. Now on the upside, I would wait for at least 23,500 to exceed and close above it. The 23 DMA is still further away, but at least to give some signs of confidence to the bullish camp, I would wait for a close above 23,500. Until then, it is more of a trading zone in nature, so I would not wager a buying here. So in terms of the IT continues to be mixed, and the unexpected reactions. HCL Tech came out with positive numbers, but it got trounced. LTTS were muted, and they came up with good results and they showed up positive performance. LTIM seems to be mixed, so there is a lack of focus, or you can say a lack of bias in the IT space. So IT is not going to trigger any kind of sentiment here. What we would like to see is how the overall result season is going to pan out in the next week, and that's what will help us dictate some trends for the days ahead, because we are looking at a very important event, which is the budget, and this a rally before the budget is very much possible, but then these levels which I mentioned needs to hold.
23,500 on the upside needs to hold. Only then we will see a pre-budget rally. That's the word from Raja. But Raja, talking about Reliance Industries, saw a good perk up, in the last hour of trade yesterday. And performance-wise, strong performance in digital services and retail and O2C as well. That has driven a record quarterly profit and EBITDA for the quarter. Good 11% jump in profit for the third quarter, and revenues were up 7.7% on a YY basis. EBITDA margin also expanded 10 basis points. Jio's ARPU, average revenue per user, saw 10% CAGR over 5 years, compounded annual growth rate, and the tariff hike impact is yet to fully materialize for Jio. So yes, and brokerages are also fairly positive. We saw CLSA come out with an outperform rating. Target price is at 1650. Morgan Stanley also has an overweight call. Target price at 1662, and Jefferies as well has a buy call. A target at 1660. So brokerages are positive. I want to get in your thoughts on how much of an upside can we see here. But before that, we are getting the first ticks, opening bell. It's a weak start, a 90-point downtick on the index. Sensex down 300 points. The mid-cap index is also started the day on the back foot. Bank Nifty as well, a 360-point cut coming in. 48,900 is where it's at. So yes, a weak start in tandem with what the global cues were suggesting. So no surprises there. We have snapped out of a 3-day gaining streak, but let's see what the other sectors are doing. Or which is the sector that's providing some bit of a support to the index. Looking at, I think it's the IT pack that has taken a sharp knock, 2.5%. I mean, I can't really spot, in fact, aside of the Nifty oil and gas index that's up over 1%, I'm seeing that, most of the sectors are trading in the red. And of course, IT has taken the lead. I want to see what the shares of Infosys are doing right now. 5% down on Infosys. ADRs were also down 5%, so no surprises there. The company has said that fourth quarter revenues could be a little subdued because of seasonality factor kicking in. And they have said that revenues in fourth quarter could be a little softer than how it panned out this quarter. This quarter, of course, it beat expectations. But I think it's this update about or view about the fourth quarter that is weighing in on the stock, because guidance wise they have raised the guidance to 4.5 to 5%. Infosys top Nifty loser, and close second is Axis Bank, 4%, almost 4% down. We know that asset quality has deteriorated. We know slippages have risen, provisions have risen on a YY basis. CASA, is at multi-quarter low. So, numbers are fairly weak. But on the other hand, you have Reliance Industries providing support, a 3% uptick coming in on shares of Reliance Industries. So yes, that's the kind of reaction coming in on these three heavyweights. But aside of that, if you look at some of the other gainers that's providing some support to the index, it's BPCL, followed by Hindalco, Sun Pharma, L&T, Nestle, Coal India, Hindustan Unilever and Tata Consumer. So some buying seen in FMCG pack as well. On the flip side, aside of Infosys and Axis Bank, the other losers are all from the IT pack. TCS, HCL Tech, Tech Mahindra ahead of earnings, Wipro ahead of earnings in the red. So yes, technology is the big laggard today, and looking at other laggards aside of Axis Bank from the financial space, IndusInd Bank, Kotak Bank, all of them are down, and so are the Bajaj twins. Okay, that's the reaction, Raja, to all the earnings that we spoke about. But Reliance Industries in particular, I want to get in your thoughts. Brokerages are positive. They have outlined target prices above 1600 rupees. Stock is at 1293. Your take on where the stock is headed?
Right. The way Reliance has been performing even in the last quarter. So there has been some significant positive reaction to the movement this time around. Compared to the last time's reaction, we are expecting a better reaction even from the brokerage houses. And the upgrade which has come in are clearly indicating quite strong upside, closer to the region of around 1500, 1600. So, and that's what is attracting attention to Reliance. Again, the performance has been much better, and the market is also reacting on a positive note. So I see that the overall trends have been on a positive side, and the kind of momentum which we are seeing definitely indicates that their diversification is helping them to stabilize their operations and the kind of momentum which it is inviting many people to participate. So I consider that Reliance could be a good bet in the current year, and one should look at it from definitely from a trading as well as investment perspective. And the target zones which one can expect on a short term investment basis can be in the region of around 1600 to 1700.
Okay, that's about Reliance. But very quickly, your take on Infosys as well before I move on to queries. We have a whole list of queries that are trickling in this morning. So, for Infosys, it's down somewhere around 4.5% right now. Result reaction, as I mentioned, some softness can be expected in the fourth quarter. Perhaps that's why the stock has taken a hit. Guidance wise, it was a good, upgrade, 4.5 to 5%. But at 1839 right now, what would you do with the stock?
Yeah, despite the guidance and the kind of results which had come out, the reaction is very clear that it's not on the satisfactory mode, and the gap down reaction clearly indicates that we are having a knee-jerk reaction based on what we have seen as far as the ADR is concerned. Now, the prices today morning have gap down, yes, and this gap down, one of the primary reasons for the market to face this kind of decline has been the IT pack. So yes, so you are going to have this scenario, and every rally is going to be a sell in Infosys. So I do not want to be a buyer in Infosys right now. So if I want to buy Infosys, so the next question will be, where should I buy Infosys? So I would look to buy Infosys closer towards the support region of around 1700 to 1650, where there is some decent set of supports here. So I would wait and watch how the markets are going to react and how the dust in the IT sector settles down, where all the IT names are coming out with the results, and how the IT index itself settles down before I get into any IT name. I would not be a buyer in any IT at the moment. I would wait and watch. Definitely, it's an interesting space, but then it would be prudent to buy at lower levels.
Prudent to buy at lower levels, but but what about LTI Mindtree? Numbers are fairly inline-ish. Stock is also, I think, down a percent or so, but the stock has been stuck in a downtrend. Particularly for LTI Mindtree, are you finding the risk reward attractive?
Yeah, at the current juncture, like I mentioned, the IT stocks are mixed, and the kind of reactions which we are getting is not justifying the kind of movement. So, like we discussed at the start of the show, there is a lack of enthusiasm here. We are still awaiting some clarity on the global cues, and that's why you will find that your it's more of a trading nature than of a short-term investing nature. So it is advisable to wait for the clarity to emerge before you get into a investing mode. Yes, as far as trading is concerned, yes, the trading options are always available.
Okay, not from an investing perspective, but a trading perspective. You can look at some of these IT names. But let's talk about Kalyan Jewellers. This stock has seen immense pain, recently. In fact, it is also in FNO ban. We have a query coming in from Debu K. What would you do with the Kalyan Jewellers? After the stupendous up move, the stock has been stuck in a downtrend, and quite badly, right? So, is this an opportunity, or would you stay away?
Yeah, Kalyan Jewellers has come down around 35% in the last 5 days, and yes, it was a flag bearer for in this particular segment. But what has happened is that the sudden sharp reaction and the downtick has definitely created a panic selling scenario, and I don't think that it's going to die down soon, and it's breaking important levels here, and till we see some dust settle down, I don't want to participate here, because I am feeling that this decline in this stock can persist, and we could see lower levels in the region of around 500. So I would not want to enter this stock at this moment. Look to buy at 500, and if the supports around 530 5 are broken, then you can look at the 500 level also being tested. So it's best to stay away from the stock. And if you have got a holding below 500, would be signs for more sell-off here.
Okay, below 500, the sell-off could intensify on Kalyan Jewellers. Debu K, I hope that answers your query. You want to take up a query coming in from Alex as well. Kajaria Ceramics, he wants to know whether it's good for the long term. The stock has seen a fair bit of pressure. In fact, it's just coming off its 52-week lows. Last 5 days, but it has seen some bit of traction. But what should one do with the Kajaria Ceramics, if one is looking at it from the long term view?
Yeah, so the kind of industry which it is in, so there is a continuous demand that is emerging, and with the focus on growth, one should look at this stock as the current reaction as an opportunity to buy into. And over the last few months, the stock has definitely been consolidating, but it has been holding on to the higher levels. So it clearly says that the current pullback at the current juncture, is an opportunity to add into the stock. I can see a targets towards 1800 within the next 1 year. So one should look to hold on to the stock and buy it at the current levels.
Okay, that's the view. Hope that answers your query, Alex. I know we discussed Axis, but I have a query from Advait Joshi, and he wants to know if it's a good time to buy into Axis Bank for the long term. The stock came very close to its 52-week lows. Of course, result reaction of 4% down. At least for the long term, should one get in now? Do you think it makes sense?
Yeah, see the kind of NPAs and the kind of NIs which Axis Bank has been reporting, and they have not been able to generate any kind of confidence in the investors, and the kind of trajectory which it has been showing over the last few months has not been an encouraging sign. And with the banking not shaping up, and the private banks especially are not living up to the billing, I would not look to consider this as an opportunity to buy, because Axis Bank is one of the worst performing banks, and it should not. Instead, one can invest their funds into some other interesting space, because that will be a better opportunity for them.
Would you recommend any bank, Raja, aside of Axis Bank?
Yeah, so what I'm finding is, from a trading perspective, I find that AU Bank has been, so from the private banking space, AU Bank has given a sharp decline and has been consolidating. And based also on the OI data, I find that there has been some bit of development happening on the AU Bank. So that could be a good call. It could be it's a low risk call. So if you want to invest for, say, maybe 10 to 15% jump, then AU Bank would be a better bet.
Okay, AU Bank, Advait, hope that answers your query. Let's take up some other queries then. Maheshwar Bhanu wants to know if PI Industries is good to accumulate, add or avoid. How would you look at PI Industries now?
Yeah, the specialty chemical space has been waxing and waning, and PI industry did see its fair share of run till September, and since then the price has been in a corrective mode. So I would be quite careful in looking into PI industry. But yes, if the current juncture at which it is holding now, and with some bit of focus coming back on China, so we can see that the specialty chemical industry picking up pace once again. And this particular zone which it is lying in right now is an interesting spot, and one can consider buying at this juncture, and your stop loss will be below 3300. From an investment perspective, you can expect a target towards 4300 within the next 6 months.
Okay, that's about PI Industries. Hope that answers your query. Last query for today then, it was on an Indigo Paints. coming in from Puneet Rajiv Saxena. He holds the shares at a level of 1400. What should he be doing, because he's making a bit of a loss? The stock is trading at 1253. Stock is down 15% in the last 1 month or so. Paint space, it has been, in pain, so to say. Competition concerns, some fundamental concerns. But, if somebody is holding at a level of 1400, how should one really navigate?
Yeah, I do agree that this particular space has been undergoing some bit of challenges, and the leaders are able, even the leaders like Asian Paints or Berger Paints, they themselves have been quite poor in their performance itself. So the entire sector is facing the impact of the oil prices, and now the pain is not going away. And if you see the trajectory over the last almost 2 years, it has been unable to move above 1600. So now, considering that it is in such a scenario, so one should move ahead, and if the prices travel below 1200, then it would not be best to sustain in this particular stock, because it could lead to further acceleration on the downside. Now, if there were a revival, then you should be looking at 1700 as an important level in Indigo Paints for it to exceed. Then if those levels are exceeded, then you may see strong positive trends emerge in this counter. So it's a wait and watch game, and these are the levels which I would be tracking: 1200 on the downside, 1700 on the upside.
Okay, that's the broad range that Raja will be watching out on Indigo Paints. Hope that answers your query. With that, we've come to the end of the query segment. But Raja, before I let you go, recommendations for our viewers?
Yeah, I would like to go ahead with the recommendation. One, I would like to go ahead with the recommendation in Biocon, and I would like to buy it at current levels. And I would also like to have a stop loss at 385 for a target towards 398. More from a trading perspective. And the other stock which I would like to suggest is HAL at current levels, with a stop loss at 39.40 for a target towards 4030.
All right, Biocon and
HAL.
these are the recommendations really coming in from Raja. HAL, right? I kind of lost it there. Biocon and Hindustan Aeronautics, two recommendations coming in from Raja. With that, Raja, thanks a lot for joining in. Take care. I can reckon your throat isn't all that great this morning. Hope you rest it out well over the weekend, and get prepared for the next couple of busy weeks that await us.
Yeah, thank you so much. Bye. Good day.
Bye. Thanks. Well, on that note, taking a look at the markets, we are where we were at when we saw the market open, 23,230, 80 points lower on the index. Mid-cap index also in the red, but it has paired some of the opening losses. On that note, let me bring on board our fundamental guest for today. Joining me, Siddarth Bhamre, Institutional Research Head at Asit C. Mehta Invest Intermediates. Great to have you on the show, Sid. Always a pleasure chatting with you, and I think I'm talking to you for the first time this year. Wishing you a very, very happy new year, although it's been a fairly volatile one in terms of stock market movement. But otherwise, wish you a very, very happy and prosperous new year.
Happy New Year, Nandita, and to all your viewers. Thank you so much for having me again on your show.
Thank you. Thanks a lot for joining in. Let's talk business then. It's the start of the earnings season. We've had, big ticket numbers from IT names coming out. We saw the trend. The commentary has been fairly positive when it comes to discretionary demand. TCS was good. Even Infosys, for that matter, they have revised their guidance upwards. But some bit of, guidance for the next quarter that has disappointed the street. We can see a 4 to 5% downtick on Infosys. But how do you really approach the space now that there are green shoots of improvement in discretionary demand?
Nandita, I would say green shoots in IT were visible, 2-3 quarters before, and the sentiments in IT were very negative. And if you recall, 2 quarters back, most of the street was underweight on IT. And we were saying that valuations are really compelling, though story is negative. And that is when, IT started outperforming. Since then, since last 2 quarters, if you look at, year-to-date return, or you see quarter-to-date, or you see last year-to-date returns for IT, they have outperformed markets. Yes, you are right that, companies have revised their guidance upwards. The revenue growth has also been in line. But still, stocks have been, not showing that kind of traction, barring TCS, because valuation is not as mouth-watering as it was back, a couple of quarters back. Having said that, I believe that IT would continue to perform well, even though, Street would be wondering. In fact, we got calls from our clients and dealing that why, despite, good guidance and beating Street expectations on numbers, Infosys stock is correcting. I think it's merely a profit booking. Yes, next quarter, probably there might be, some hiccups here and there. But let's not assume that IT stocks would start any kind of, selling big time. I still believe that, looking at the valuations, they are not mouth watering right now, but they are not very expensive. And the way, geopolitical situation is panning out, the way earnings slowdown, which we are seeing from companies which are catering mainly to domestic markets, I believe fund managers would be compelled to remain in IT space. And I remain fairly confident over here, and would suggest to maintain the exposure in IT.
All right, maintain exposure in IT. Of course, the demand commentary has been pretty good, and Street has actually taken heart from that, and we saw that happening right after TCS results as well, right? But let's talk about the big event next week. Trump's inauguration on the 20th. A lot of jitters around what he'll announce in terms of tariff. There have been talks of 60% tariff on China. He's already called India the tariff king. So back home as well, there are quite a few jitters. But as a Trump trade, what would you look at now, Siddarth?
It's very difficult to guess, because today world is thinking that he would come and wage war against China, but there's a difference. Last time and this time. That time China was growing, uh, at very marvelous pace. Right now they're struggling at 4 to 5%, and also President Donald Trump has to live up to his character, right? Which is unpredictability. So if today everyone is predicting that he would wage a tariff war, maybe it would be too boring for him to do what everybody is thinking. So I would, keep my head down on this, will not give too much of weightage, and will try to identify stories and stocks where, the domestic consumption is high, and companies and sectors which are more reliant on domestic growth rather than outward. So if I have to hedge myself from that story, then that's how I'm going to position myself.
All right. Yes, yeah. We all are, well versed with what Trump tends to do. One morning you wake up and you see a tweet from him, and the entire global market, even our markets, go into a tailspin. So we've been there. But let's see what really happens once he formally takes over. But another space that has been in focus is the entire life insurance space, right? Numbers from HDFC Life are fairly good, but the sector per se has seen a lot of correction. There are regulatory overhang as well. First, before they could get over the what do you call it, the surrender value issue, there was this whole issue about strategy on bank assurance. So the sector per se has been in news. Earnings wise, HDFC Life, as I mentioned, has been good. But how are you viewing it? Do you see the regulatory headwinds posing more risks going forward?
Nandita, you have pointed out most of the concerns which the sector has going on. Not just since last few months, but since last few years, I would say. And stocks, despite, or companies, despite posting decent profitability, haven't seen much traction. In fact, on valuation perspective, they have kept becoming attractive. But there comes a point where most of the concerns are in price, and we are seeing that thing happening in insurance space. As you mentioned, HDFC Life, which is one of our top pick, we do cover life insurance space very actively. We are seeing decent traction, be it in APE or new business premium. Also, from valuation perspective, these stocks are looking attractive. We for now believe that the most of the concerns are in price. In fact, you mentioned about one point about bank or insurance where there are talks. Mind you, there are no rule as such right now, but there are talks that IDA would regulate that how much percentage of revenue comes from banking channel, but nothing has been implemented as of now. And we are also seeing that there are few regulatory changes which has happened in terms of the commission distribution, which has led to enhancement of margin. We are in a market, Nandita, where most of the companies are disappointing on earnings, and we believe insurance companies won't. And at these valuations, they're pretty attractive. We have, in pecking order, if I have to say, we have ICICI Pru is a buy for us, so is SBI, HDFC Life. As a matter of fact, even LIC insurance from valuation perspective is buy, and we have an hold rating on banks.
Okay, so that's the view, positive view on the life insurance space. Of course, valuations are looking attractive, and perhaps the bad news, or regulatory overhang may be in the price. But last question really. The IPO market has been fairly hot, right? Even though market conditions have been a little volatile, some of the new listings have seen good premium. And in 2025 as well, we are expected to see a barrage of IPOs. Anything in particular that you would want to highlight that one should really watch out for?
A lot of interesting companies are hitting the market. Something which caught my attention, and we have been monitoring is, though I won't take name of the company, but then in power space, there's a lot of traction which is happening, Nandita. And one of the company which is soon going to hit the market is catering to HVDC space, which is more into the transmission side of the power. A lot of companies are talking about or implementing generation, but the transmission is the real challenge. And if we have to do high voltage transmission, then HVDC is the name to go with. So soon you will see probably by Jan end or Feb, we would have one company. It's a small cap company. And that looks pretty attractive, which is competing with giants like Hitachi, Siemens, JBVs of the world. In India, if one has to have HVDC electrical components, then that is the only name to go with. So yeah, keep your eye on, and maybe next time when we are talking on your space, we will divulge the name as well.
Sure, point taken, Sid. With that, would like to thank you for taking our time and joining in. I'm afraid we don't have much more time to go, but always a pleasure chatting with you. Interesting, and we'll catch up soon sometime.
So thank you, Nandita.
Thank you. Well, on that note, let's take a look at what the markets are doing. Sell-off has kind of picked up pace. We are looking at a triple-digit cut on the Nifty now. It's around that 23,180 mark now, below that 23,200 mark. 23,263 was the December low, so we are well below that right now. Let's see, 23,000, yes, 263. That is the crucial level, the December low. If we manage to shut shop above that, perhaps it would be some bit of a solace, because 3 days good up move, but today of course we have snapped out of that. Mid cap index although has paired some of the losses, but it's still trading in the negative zone. And among the big results reactions, of course Infosys is down in excess of 5% now, in fact almost 6% as we speak, and Axis Bank is also down 5% also, but it's Reliance Industries that's capping some of those losses on the index. It's the top Nifty gainer, up somewhere around 2% or thereabouts. With that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in, but you guys stay tuned to Money Control for all your other news and updates, and have a great day ahead.